Since the banking crisis erupted almost 4 years ago, a debate has raged. Companies say that when they go to the banks are not lending. The banks are saying that they are lending, but that the demand from companies is down because the economic conditions are so bad, fewer companies want to borrow. A new study by the central bank has answered this question more definitively than ever. We spoke to Fergal McCann, one of its co-authors.
We've looked at Irish SMEs and we found that on the demand side, firms reporting an increased need for bank loans or bank overdrafts. In both cases, Irish SMEs are roughly around or even above the euro area average, which suggests that it doesn't seem to be the case that Irish firms simply are not applying for credit. Looking at application rates as well as the reported need for finance, we find something similar. We find Irish SMEs are at or marginally below the euro area average, but not off the charts. On the supply side then, we were able to measure the number of firms that report that they were rejected for a loan or an overdraft when they applied. Whether we look at the Mazars report used by the Department of Finance or the ECB's survey, we find that Irish rejection rates were the second highest in the euro area. So this suggests that credit conditions are quite difficult for Irish SMEs and they're more likely than almost anywhere else to be rejected for a loan.
How many are being rejected?
Depending on the survey source used, it's between 25 and 28%.
So about 1 in 4?
Between 1 in 4 and 1 in 3.
Also you found that not only is there a very high level of companies that are being rejected when they go to their banks for loans or overdrafts, but you also found that a lot of companies have simply given up. They're discouraged. They're not going to the banks because they just don't believe they're going to get a loan.
Yeah, so the survey also asks firms who did not apply for credit, what was your reason for not applying? One of the options in the survey is that the firm believed that they would not get a loan from the bank. Irish SMEs report the second highest they have the second highest share of discouraged borrowers. So this suggests that, as a share of the total, it's still quite low. It's between 10 and 15%. I might just confirm that very quickly. It's 15% on the dot report that they did not apply for a loan due to fear of rejection. So this suggests that compared to the euro area, the Irish credit market is discouraging more firms than you see elsewhere. And one policy measure that the government have tried to implement is to improve the relationship between lender and borrower and improve the perception in the population of SMEs of the lending institutions. And these data suggest that that's a very important initiative and that much work is required on that front.
The amount of loans to companies outside the property business has fallen by about a third since 2009. So there's been a huge contraction in the amount of credit to companies in the economy. In the report you say that when banks are withdrawing credit like that, it has a very bad impact on employment levels, on companies investing in new exports. Could you elaborate on that?
Well, the international evidence out there suggests that if a firm truly is credit constrained, in that in other circumstances it would be deemed creditworthy, but due to conditions in financial markets it is not able to access a loan. If those conditions exist, firms are less likely to invest in technology, they're more likely to shed employment, they're more likely to close down full stop, along with a series of other, they're also less likely to spend on marketing and less likely to invest in technology. So these are all very important factors for long-run growth. So what we fear is that if firms that have a demand for such activity are not able to engage in such activity due to credit constraints, this can have an additional negative impact on long-run economic activity.
Could you also elaborate on some of the findings you have, some of the figures you have in the report in relation to the size of the average loan a company gets and the collateral companies have to put up to get loans?
So firms are asked for a number of credit conditions, whether the condition had increased, remained the same or decreased in the past 6 months. So they're asked, did the interest rate they were charged increase, did the collateral requirements increase, and did the size of the loan available decrease? On interest rates, Irish SMEs are roughly around the euro area average. So there are a number of countries where interest rates are increasing at a much higher level than in Ireland, and they're the other crisis countries such as Portugal, Greece and Spain. However, on the size of loan available and collateral requirements, we're seeing that Irish SMEs are the second most difficult, you might say. So they're the second most likely to report that loan sizes are decreasing, and they're the second most likely to report that collateral requirements are increasing. So outside of the likelihood of getting a loan, it appears that the other associated conditions are deteriorating in Ireland at a more rapid rate than most other countries in the euro area.
So that would suggest that not only are 1 in 4 firms who go to the bank looking for a loan or an overdraft being rejected, but the ones that are getting loans are getting less than they're looking for.
That it's not exactly clear from the survey responses if those firms that report that less credit was available are different firms to those that were rejected. It may be that less credit was available and they were rejected, so we can't quite say that, but the pattern suggests that some of these firms are probably firms that got credit, and for those firms it is likely, but we can't say for certain.
Is there anything in any of your findings that would suggest that a bottom has been reached or that things are possibly starting to improve?
We could take some hope of, relative to the euro area, things look quite bad for Irish SMEs. However, relative to the previous period in Ireland, no credit condition has gotten any worse. So it seems that in the period from September 2011 to March 2012, we have seen some sort of a stabilisation in the Irish SME credit market. Rejection rates are actually slightly lower than they were, despite still being the second highest in the euro area. And on interest rates, collateral requirements and loan size falls, in all those cases, the figures are not as bad as they were in the previous period. So there is some hope that things are turning a corner. However, it must be remembered that relative to most countries in the euro area, things still appear quite difficult for Irish SMEs.
Fergal McCann, thank you.
Thanks.